Hi, welcome back to WOW, the Wealth Optimization Workshop. Scott Collier, the Call Dog, back here with you. Excited to talk to you today about this very captivating investment opportunity that's been available to Canadians only since 2009, the tax-free savings account. When it came to non-registered investments, one of the biggest drains on those non-registered investments was the tax on the growth. So the opportunity for everyday Canadians to take advantage of a tax shelter to get tax-free money where the investments are flexible, you choose the investments. Often I'll hear people say, well, what's the interest rate or what's the rate of return on your tax-free savings accounts? And they've misunderstood. The investment inside of that tax-free savings account, the rate of return on that investment, whether it be a mutual fund, a segregated fund, a GIC, an annuity, different types of securities. That is what determines the interest rate or the rate of return on the investment, not the tax-free savings account. The account itself is simply an umbrella that you put investments into. The advantage is that you get that money tax-free. The growth is tax-free, and when you withdraw the money, that is also tax-free. So unlike RSPs that grow on a tax-sheltered basis but are taxed as income when you withdraw money, there's no tax deduction here when you contribute money in. It's the growth is tax-free and the withdrawals are tax-free. I hope that makes sense how I explain that. Currently 2019, you're allowed to contribute $6,000 this year on a tax-free basis. However, if you've not been contributing so far, total since it began, the cumulative limit, $63,500. So if you got you and a spouse, it'd be $127,000 that you have available to you that you can save and invest money on a tax-free basis for whatever that may look like for you. So it could be for retirement purposes, but it doesn't have to be. It can be for whatever you're saving for. The one key I would point out though, make sure it's investments that are actually going to get growth. Every once in a while I'll see people treating like their emergency fund with their TFSA. And I question the logic behind that, because if you're in an investment that really isn't getting any growth, then what's the advantage of that tiny little bit of growth being tax-free? Right? Use the tax-free savings accounts as they were intended for investments that are a bit longer term in nature, more significant in nature, where you're actually going to invest for growth so that then you can receive that growth on a tax-free basis. So that it actually takes advantage of the purpose of the account. Hopefully that makes sense for you. There is carry forward contribution room. The one thing when you withdraw, let's say you took $5,000 or $10,000 out of your TFSA, you actually regain that contribution room. So unlike an RSP, where once you withdraw money, you lose that carry forward or that contribution room forever, in this case you do not. So you can recontribute. However, listen to this carefully, you must have a year between when you withdraw money and you recontribute new money into the plan in order to stay on side from a tax perspective. Often people want to pull money out and then recontribute back money right away, and they didn't realize they weren't able to do that. So that's something to be aware of as well. So this is an investment where you can choose whatever investments are suitable to your investment objective, your time horizon, and your risk tolerance, but to maximize some growth on a tax-free basis, withdrawals on a tax-free basis. Hopefully you're excited as I am about this opportunity for everyday Canadians to take advantage of a great tax-free investment opportunity. Look forward to talking to you.